Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, the 13th of April, 2022. We're on to 6:15 at night. So an interesting day. You know, you talk about schizophrenia, and we have it. Yesterday we saw CPI numbers that were hot, but not as hot as the market wanted, a morning rally that all crashed in the afternoon. Some people think the crash was because of the Cleveland reports that came out that showed their CPI running hotter than the people think. Others think it was, like me, Leo Brainerd coming out, our next vice chair of the Fed, talking about how hawkish he is right now on the market. Today we had the twin report of the CPI. The PPI came out and red hot. What did the market do? Stock market took off. And this time it held the rally. It didn't give it up. Second, metal markets rallied anyways. Good news on that. Dollar index down a little bit. Foreign currencies gaining on it. Now let me give you the thinking on this. A lot of people think that the market is going to see a peak CPI, PPI reading let's call it this next 30-day, 60-day period. I can't argue with that. If it does, the problem I think some have is they're not understanding it's probably going to stay hot for a while. You haven't solved any of the supply issues coming out of China. I don't see that. You haven't solved your energy problems at this point. 108 in Brent is not solving energy problems. So it's a question in my mind, which isn't a big mind, that maybe we're just not going to get a worse readings going down the road, but that doesn't mean they're better. And does the market come to terms with that and say, okay, we don't have to crash on that accord? I don't know if that's the case in the stock market. For the metal markets, I think it's bullish regardless. I think inflation running hot. The market will, along the way, see the Fed make moves. Metals will back off because the dollar will do what it does. But as long as that theme is in place, that inflation is still very strong, not necessarily running to new peaks, just staying very strong for a while, that should be the background that's pretty good. In the gold, we're up almost 1.8% for the week. Remember, tomorrow's the last full trading day for many of us as we get into the Good Friday holiday now. If we come to the chart here, there's nothing running away in this market. You're not running towards these numbers at this point. So I'll stick with my argument that the market's come to terms that we have high inflation and it's running off that. And I'm looking for a better trend look. Right now you have a lower low and a higher high. That is not what a trend is made out of. The market fought a battle for a long period of time under the 18-day average of closes right through here, and that lasted till April 6th. This is only the 22nd. It is a fair amount of time because once you got under the market over here and you crossed over it, you've stayed over it, not quite an equal amount of time, but getting to that point. Where's support in the market? Back at the 1946.40 level. Now you'd have to say if you get under 1916.20, there's a problem. But to get there, you've got to go through a lot of support. So the picture is changing in the market. The resistance hasn't changed. The resistance is crystal clear at the upper Bollinger Band. That's what the market is having trouble with, and you're still in an overbought situation. I don't think you attract new money in an overbought situation into the market. I do think you'd attract it if you embed it, sort of like you did back here, and then the results can be different. So this resolves itself, in my mind, by either correcting the overbought situation or embedding, and you won't know that till sometime next week. The gold-silver ratio, silver has come alive. You can see that very clear on this right now, and you see it on the silver chart as it has joined gold in fighting at its upper Bollinger Band. I'm going to repeat myself. I don't think you attract new money when you're overbought in an upper Bollinger Band. You can. It's rarely professional money that would enter that scenario. It could be, but it's typically, in my mind, not the way that it works. Copper, I love what it's doing. Copper is finally trading sideways in here. The ultimate resolution, I think, is way up here. Why? Eventually, the COVID situation in China comes to an end. When it does, the factories reopen. People will start going back to work. I've been reading Wall Street Journal articles about people in America that have family in Shanghai and what they're going through for lack of groceries, medicine, and the like. Very hard to get anything. The city is in a shutdown. You can imagine demand for all this. Just understand what's going to happen as the city starts coming out of that. And what about the other cities throughout China where they go into the zero tolerance policy? And the factories have to make up orders and people want to get back to work and make a living. That's what's going to happen in my mind. So I'm going to look for this to build a base through here, and we'll see if that's what happens or not. In the platinum market, a report came out by Goldman Sachs today concerning platinum and the palladium market. Goldman says that those two big refineries out of Russia that can't deliver their goods, their metal, onto the London Metals Exchange can beat it many different ways. They said the way you can beat it is they don't send it there, they send it to some other country, they get it refined by some other area, and then they ship it into the exchange, and it's not Russian at that point. Good thought. Good thought. I've never worked on the London Metals Exchange, but that makes sense to me. It still says that any contracts that we're looking for, you have to go through that whole effort. But I got it, and I do appreciate the report, and I understand what they said. When we come over to the dollar, you're embedded. You're running at the upper band. You had a reversal day, not an outside day today. How this market reacts on follow-through, if you get it to the downside tomorrow, is crucial to whether you're going to keep the embedded rating. If we take a look, both numbers were over 80 today. Both were over 80 on Tuesday. And, give me one more, both were over 80 on Monday. So you have your embedded reading. You didn't have it on Friday. This is going to be the first test, does it hold together? I think the pros will buy that test. They'll get out of the market by the end of the day if you close under 79, again, in my opinion, and they'll keep looking for these higher highs to develop in the market. That's the game plan that I see there. And that's what I talk about when I do all my research. You know, I want to give you my research if you've not tried it before. Twice daily, I do written reports, and they start Sunday night. They end up Friday in the morning report then, and then the cycle begins. In addition, I'll give you buy and sell areas. I will give you the day's review of all the market action that's going on around the world, what's making markets move the way you hear me talk here. I write it in a way that if you have 1 minute, you're going to get through my report, and it's a lot of detail. It's not about, I learned this a long time ago, it's about headlines, bullets, give you a paragraph or two, and you've got the meat of what the day is about. I'm going to let the Bloomberg, Reuters, they're going to fill you in on details. I'm going to lead you to the details and give you a summation. So the way this all works, it works on all kinds of devices, your PCs, your tablets, your mobile apps. We have our own mobile app you can try for free as well. How do you get this? It's so simple. As I said, it's free. Follow my finger. Just take your cursor up here. You're going to get the icon. Click on it. Fill out the info, and you got everything you want. Can I make it easier? I don't think so. I'm Ira Epstein. You have a good day.